Quick daily market analysis for Tuesday, September the 23rd. Hi guys, I'm Don. I'm a financial analyst and a trader. And American markets traded Tuesday down right across the board. That's as Federal Reserve Chairman Jerome Powell flagged the risks of their policy, monetary policy going forward, saying there is no risk-free path there for them to take with regards to interest rate cuts. So he is going to take a slow, cautious approach to cutting rates and sort of data dependent there. He's trying to mitigate the issue between a slowing job market and also sticky inflation. And over European markets where stocks closed in the green. That was before Jerome Powell spoke. So likely tomorrow that risk off trade there is going to take effect in Europe as it did in the States there. So we should see a sell-off tomorrow in markets. But European markets did close higher. That's on the back of tech and wind stocks there. We also had a slight update to the German GDP forecast being notched up 0.02%. We also had bad news out of Finland showing that unemployment has risen up to 10%. That's the highest it's been in 20 years. And over to UK markets where stocks managed to squeeze out a slight gain. That's as we had a PMI reading out, which is a Purchase Managers Index economic indicator, which dropped in September down to 51 from August 53.5. So that is showing that the UK economy is slowing. And lastly, over to Canadian markets where stocks fell 0.5%. Stocks were up earlier in the morning but sold off once the Fed chair spoke as traders moved to risk off assets. We had our Bank of Canada Governor Tiff Macklin out essentially saying that Canada had to create structural economic reform in order for the country to stay prosperous in light of the tariff and American structural change with the trading relationship with Canada and the US.